Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 309 of our YouTube channel and podcast, and I could not be more excited to continue sharing with you guys personal finance topics that I think could be useful for you in your long-term financial journey. Today, we are going to be talking about buying houses, right? And this is something that I've talked about a little bit in the distant past, right? But I haven't talked a whole lot about recently, but I think it is relevant. I think it's something that we should keep our thumb on, especially in this show, right? We should be talking about housing. We should be talking about buying homes and what this should actually look like. So today is just going to be a good refresher as to, if you're a first-time home buyer, what you should look for as far as purchasing a home, things that you may need to do. I want to talk about some real estate facts over the past year or so, because 2020 and 2021 have been some very crazy years for real estate. So I want to talk about that. And ultimately, I just want you to understand the importance of home ownership and feel, empowered to own a home yourself, but do so on the right terms. So stick around for a discussion of all that and more in today's episode. Before we get started though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual watching or listening to the show on a day-to-day basis. Now, home ownership is something that has been a staple in the United States for many years. And some people want to tell you that owning your home is dumb. And some people want to tell you that owning it outright, especially having it paid for, is dumb. And some people want to tell you that, you should just rent the rest of your life and you should never own where you live. I disagree with these things, right? I think that home ownership is still a very important thing. It provides some stability and some stable assets in your life, right? And then it allows you to have something that ultimately you can fall back on if need be, but it can provide a lot of margin in your budget when you don't have a housing payment, right? You don't have to pay rent. You don't have to make a mortgage payment. Now, again, there's plenty of reasons why people would say that this is wrong, and I'll talk about some of those today. But what I really want to focus on today is how we need to go about thinking about buying a house, right? We need to think about buying a house in a specific way. But before we get into that, I want to talk about just some facts, some interesting things about the United States housing market over the past few years, and how it looks right now, what the nature of the market is, and then we can enter into talking about buying your first home or just buying a home again, right? Just reevaluating how to go about that process. So, a couple facts for you. Home values in the United States have increased 7.2% since 2018. So, this doesn't seem super substantial, right? But if you had a $250,000 home, then that would be a $19,500 increase in price on average over the past few years, right? There are almost 44 million renter-occupied homes in the U.S. in contrast to 75 million owner-occupied homes, right? So still a lot of renters out there. 91 of the top 100 housing markets have seen rent increases over the past year, right? So things are getting more expensive as far as renting goes. Let's see. Individual real estate investors account for 74.4% of rental properties in the United States, right? So that's just something about real estate investing. Let's see. Unexpected repairs and maintenance was cited by 36% of homeowners as their biggest home buying regret, right? Which is no surprise, because a lot of people jump into buying a home thinking that they can afford the home and forget that, they don't have a landlord that's going to fix everything that breaks now. It's up to them. For 78% of home buyers, neighborhood quality is more important than home size. 57% would rather have a shorter commute than a larger lawn. For sale by owner properties accounted for 7% of home sales in 2017. The average days on market before an offer was accepted was 40. Student loans represent $1.7 trillion in debt, negatively impacting the ability of younger college-educated adults to buy homes. And then 12 million U.S. households spend more than half of their income on rent. And I've heard a recent stat, maybe a little more recent than this, that not just rent or not just a mortgage payment, but I think it was something like 17 million in the U.S. They spend more than half of their gross income on housing expenses of some type, right? So housing is a very big deal, right? The costs are a big deal. The way we think about it is a big deal. The security that it provides us, the neighborhood that it provides us with, where our kids go to school, where our kids grow up, where we live, our safety, our security, our how nice the house is, how the house is built, whatever, right? All these things seem to be very important to us, right? And it's not wrong that they should be important to us, because ultimately, for the vast majority of people, this is the most expensive asset they're ever going to own, right? And home ownership has traditionally been the primary way that wealth gets passed down from generation to generation. It's not that a bunch of people are just saving and investing like crazy and passing down money in that way. It's not at all what it is. Typically, it's, you had somebody who lived in a house for years and years and years, and they paid that house off, and ultimately, when they passed away, that house gets sold and that wealth gets passed down. Okay, so this has been a way in which wealth can get passed, but obviously it's not the biggest appreciating asset of all time, right? If housing prices just increased 7.8% in a 3-year period, I mean, that's not anything to, be crazy about, right? The stock market's going to destroy that type of rate of return. But again, we're talking about an asset that you can purchase that if you can get this expense out of your life at any point, it can really free you up with a paid-for huge asset that's not likely to go down in value substantially and allow you to invest very heavily, very aggressively. Okay, so that's just kind of my opening as far as housing goes, right? I want you to understand that housing is important. It's important to really pay attention to this in our financial lives, because this is such a large part of our budget. Like I said earlier, a lot of people are paying way too much. They're paying like half of their income on their housing, which is crazy, right? And I'll tell you what I think it should be here shortly. But I think that it's such a big part of our budgets. If we fail to talk about it, then that's a big hole in this show, right? That's a big hole in the topics that I cover on a day-to-day basis. Okay, so let us talk whether you're buying a house for the first time or buying a house again, right? Let's talk about 6 things that you need to think about, 6 things that you need to consider before you purchase a home. Okay, now the first of which is, how is your financial health? Okay, so before you click through online listings or you start to fall in love with your dream home, right, you need to do a serious audit of your finances. You need to understand every single part of your financial life, because if you're going to make the purchase of the biggest asset that you'll ever purchase, it needs to be something that you pay attention to. Not only that, this is likely going to be the most debt you ever take out at one time if you're taking out a mortgage, right? You need to be prepared for both the purchase and the ongoing expenses of a home. Now, the purchase is typically the place where people feel like they have the money to take care of business, right? But the ongoing expenses is the part that they just fail to factor in. Okay, the outcome of this financial audit that you do on yourself will tell you whether you're ready to take a big step or not, or if you need to do more to prepare, right? So the first thing you need to look at, obviously, would be your savings. Okay, don't even consider buying a home before you have an emergency fund. Right? When I talk about having an emergency fund and the importance of doing so, a lot of people who rent may look at me and they go, well, there may be certain things that emergencies, it's useful to have an emergency fund for, but there are some things that I just don't have to worry about. And that is absolutely true. Right? It's true that if your heat and air goes out and you're renting, then that's not on you. And it's true that if your dishwasher stops working, or you spring a leak or a pipe burst or whatever, that's not on you as a renter. But if you own a home, all of that is on you. All of that falls on your pockets, right? So you have to have an emergency savings account, right? And I say 4 to 6 months of household expenses. Now, you notice I say we need to have an emergency savings account. So what does that tell you? If you're purchasing a home, I expect you to be where your financial foundation is already built. Meaning I expect you to be through parts 1 through 5 of the financial action plan, where you're budgeting, you start the small emergency fund of 1 month of expenses, right? You start putting money into a 401k if you have the match, or a 403b if you have a match just up to the match, right? You get out of all consumer debt other than a home. then you build up that fully funded emergency fund, right? That's 5 things that you need to do before you ever look at purchasing a home. Because ultimately, if you don't do those other things, right? So let's say you don't have an emergency fund. Things can break and it can make you go into debt on your home. And that is very, very difficult, right? That's a difficult thing to climb back out of, right? We don't want to incur debt just because we weren't financially prepared. Okay, so emergency savings, that's why that's a big deal. Your budget, right? Your budget is a big deal because you want to know where your money's going, what percentage of your money is going to be spent on the house, on the mortgage, what you should allot for, repairs and things that may go wrong within the house. All those things need to be accounted for in your budget. The investing part, that's something that is not necessarily associated with the importance of waiting to buy a house until you have those things set up. But it gets you in the habit of investing and saving, which you will be doing once you have a home as well. And then being out of all other consumer debt is huge because, right, you have to think about this. A lot of people, they run out of income and they are house poor because they have so much other debt on their books. Right? They have all these other bills that they have to pay. They have all these other debts that they have to service, right? And if they have all these debts, then that's going to really, squeeze, one, the amount that they can spend on a house, and then two, it's going to squeeze the amount of money that they have left after they make their mortgage payments and they pay all their other debts, right? So getting out of consumer debt is a huge thing before you go about purchasing a home. Also in your savings, right, you need to make sure that those upfront costs can be covered, right? The down payment, the closing costs, things like that. And this is a big thing, especially for first-time home buyers, right? For first-time home buyers, when you look and you think about a down payment and closing costs, right? For somebody who already owns a home, they may be able to, just call on the equity of their home to really help them out with that down payment, right? Or call on, the equity in their home if they took out a HELOC or something, whatever, for closing costs, right? But for the first-time home buyer, it's coming out of your pocket because you don't have any equity in another home. You have to come up with that money, but you need to make sure it's taken care of before you ever jump into any agreement that you make on a home. Now, you need money put away not only for those costs, but again, for your emergency fund, and lenders will require that you do have money to take care of these things. Now, one of the biggest challenges is keeping your savings in an accessible, relatively safe vehicle that still provides a return so you're keeping up with inflation, right? And the keeping up with inflation thing and providing a return is kind of out the window right now, especially for things that we need in the short term. We do not, if you remember me saying this, we do not invest, right? We do not invest money that we are going to need in the next, 3 to 5 years, right? We're not going to invest that money. We're going to keep that money liquid. We're going to keep it in a high yield savings or something of the like, which right now is not very high yield at all, but keeps the money safe and that money's there when you're ready to use it. Right? You need to make sure that that money is available to you, and it's not going to grow a lot, and that's going to be frustrating. But if you have 3 to 5 years, and let's say you have a brokerage account that you can feed money into and things like that, then putting money into a brokerage account to save up to end up buying a new home or something like that can be a great option. But having that time horizon is huge because we don't want to lose the money that we're ultimately going to need. Okay. So we need to do that big audit of our finances. We need to look at our savings, review your spending. Then you also need to check your credit. This is the only place in the financial action plan. This is the only place in anything that I teach where you need to pay attention to what your credit score is, right? Because generally, if you want to get a home loan, you're going to need a credit score. Now, can you get a home loan without one? Yes. But is it far more difficult? Yes. Okay, so you'll need good credit, right? You need a history of paying your bills on time and a maximum debt to income ratio of 43%. Lenders these days generally prefer to limit housing expenses, meaning principal, interest, taxes, and homeowners insurance to about 30% of the borrower's monthly gross income, which is funny that this is said, and then we find out that this is not happening at all when it comes to housing costs across the U.S., but the reason that a lot of that's probably happening is because of high rents. Now, this figure can vary widely. This percentage can vary widely, and it depends on that local real estate market. So all these things are things you need to keep in mind. Keep in mind your spending, your budgeting, the savings that you have, your credit. You need to keep all those things in mind. And if all those things check out, then we can go to the next question that we have, right? Which type of home will best suit your needs? Okay. You have a number of options when purchasing a residential property, right? You have a traditional single family home, which is what most people purchase. There are duplexes, townhouse, condominium, a co-op, or a multifamily building with 2 to 4 units. Each option has its pros and cons depending on your homeownership goals. So you need to decide which type of property will help you to reach those goals, right? You can save on the purchase price in any category by choosing a fixer-upper, but you need to be warned, right? The amount of time, sweat equity, money, and everything that you think you're going to put into that fixer-upper, just go ahead and double it, because it's probably going to take that much more in order to get it to be actually what you want it to be, okay? So don't be disappointed by, buying something cheap, because what they say, you get what you pay for. Okay, so you may have to do a lot of work there. So really pay attention to the type of home that'll best suit your needs. Don't just assume that because everybody else purchases something that's what's going to work out best for you. All right. Then, what specific features do you want your ideal home to have? Now, notice I said ideal, not dream. Right? Ideal means, we're being rational here. Now, while it's good to retain some flexibility in this list, right, you're making perhaps the biggest purchase of your life, and you deserve to have that purchase fit both your needs and your wants as closely as possible. Now, this doesn't mean that there can be, no leeway, that there's no compromise, but it does mean that we want to follow as closely along as we can. Your list should include basic desires like size and neighborhood, all the way down to smaller details like bathroom layout, kitchen fitted with durable appliances, things like that. Scanning real estate websites can help you to get a sense of the pricing and availability of properties, offering the features that are most important to you, because ultimately, let's say you're moving somewhere, right? And you're moving somewhere for a job, or you're moving somewhere for any number of reasons, right? The cost of housing in different places varies widely, right? It's very hard to find the exact same house in a different place and it be the exact same price. Right? Now, this happens, but if you're moving, close to a large metropolitan area, or if you're moving to a rural area, right, your prices may increase or decrease substantially, and that can really impact all the features that you can have in your ideal home. So really take all that into account, and that also impacts the amount of money that you need and where you need to be in your financial life in order to say, yeah, I am ready to purchase this home. Okay. Then the fourth question that we need to ask ourselves about our potential house is, how much mortgage can you qualify for? Okay. Again, this is not how much can you actually afford. That's coming in a moment, right? But how much do you qualify for? Before you start shopping, it's important to get an idea of how much a lender will give you to purchase your first home, right? You may think you can afford a $300,000 home, but lenders may think you're only good for $200,000 based on factors like how much other debt you have, your monthly income, how long you've been at your current job. In addition, many real estate agents will not spend time with clients who haven't clarified how much they can afford to spend. Okay, because it's going to kind of be a formula of, how much you can afford to spend, and then they'll look at all those different factors, which can be a big pain, them checking all of your pay stubs and all that kind of stuff. But ultimately, they want to make sure that you can qualify for an amount that you can actually repay, right? That's part of their job. Now, you need to make sure that you get pre-approved for a loan before placing an offer on a home, right? In many instances, sellers will not even entertain an offer that's not accompanied by a mortgage pre-approval. You do this by applying for a mortgage and completing the necessary paperwork. It's beneficial to shop around for a lender and to compare interest rates and fees by using a tool like a mortgage calculator or Google searches, right? You just need to make sure that, before you go about buying a home, that you can actually borrow the money that you need to buy the home. Right? It seems pretty self-explanatory, but a lot of people don't know that they need to get pre-approved. They think that all this happens at once at the transaction, and that's just not the case. There's a lot of groundwork that needs to be done before you can just go about buying a home. Okay, so you need to find out how much you actually qualify for. Now, apart from that, you need to look, and this is more important in my mind than how much do I qualify for, because you can qualify for some absurd amounts as far as mortgages go, right? But how much home can you actually afford? Okay. Sometimes a bank will give you a loan for more house than you really want to pay for, right? Just because a bank says it'll lend you $300,000 doesn't mean that you should actually borrow that much. Many first-time homebuyers make this mistake and end up house poor, right? And when we say house poor, we're saying they are spending too much every single month on their mortgage, right? And then they'll have little left after they make their monthly mortgage payment to cover the costs such as clothing, utilities, vacations, entertainment, or even food that accompany their life, right? In deciding how big a loan to actually take, right, you want to look at the house's total cost, not just the monthly payment. Consider how high the property taxes are in your chosen neighborhood, how much homeowners insurance will cost, how much you anticipate spending to maintain or improve the house, and how much your closing costs will be. You need to have an all-encompassing idea of how much you can actually spend every single month and determine if that is a reasonable amount relative to the amount of money that you bring in and the amount of money that you have. What I think is right, what I think is proper here, right? How much house can you actually afford, right? When it comes to just payment, okay? I'm not talking about, all the closing costs, and I'm not talking about maintenance and improvements and things like that. I'm talking about your payment, which is going to include your taxes and insurance as well, right? Your payment, taxes, and insurance should not exceed, right, 25% of your take-home pay. Right, should not exceed 25% of the amount of money that you make. Now, some people make that 25% of gross income, but ultimately you're not bringing home gross income, right? Let's do 25% of what you actually make. Now, this kind of puts you in a box, right? Kind of says, okay, you need to spend less on this home, but that's still a very doable amount for most people. Now, the next thing that I say as far as, can I afford this home or not, maybe something that really puts a damper on your party, but ultimately it's the best thing for you if you want to get your house paid off in a reasonable amount of time. Don't take out a 30-year mortgage, right? The longer the mortgage duration, right, one, the more you're going to pay, right? You're going to pay more for the exact same amount on a loan, right? But not only are you going to pay more, you are going to have less actually paid off over time. So if I take out a 30-year mortgage after 15 years, I won't even have half of that house paid off, right? But if you take out a 15-year mortgage, 15 years later, that whole thing's paid off, okay? You're going to pay more interest. It's going to be more costly on the 30-year mortgage. So I say 15 years or less on the mortgage, but of course that's going to increase your payment. Now, people think that by cutting the time in half, you double the payment, and that's not true, right? Given how time value of money works, the increase in payment is less than double, right? Substantially less than double in many cases. So I'll just give you a perfect example, right? So if we look at, let's say, a $250,000 house, right? You have a $250,000 house, let's just say at a 3% mortgage rate, right? You have a 3% mortgage. It's on a 30-year loan, and it is a $250,000 house. Okay? Our payment, just principal and interest, this doesn't take into account taxes and insurance, obviously, because we can't do that with just the math, right? Your principal and interest payment there would be $1,054.01 every single month, okay? Now, if I turn that into a 15-year mortgage, right? I turn this into a 15-year mortgage, so that means I just decrease the amount of time over which I pay this thing off, right? But everything else ultimately stays the same. The payment increases to $1,726.45 per month. So you don't see a doubling in this particular situation. You won't ever see a doubling in your payment there, but you see an increase of $672.44, which is, a 67% increase in your payment, which is substantial, right? But ultimately, it is still doable if you have your finances in the right order. You know how much you're going to spend on this home. You have the proper savings. You are following some good rules as far as how much house you can actually afford. That is what you should be doing. Now, there, I ran that with the same interest rate in both cases, which is typically not the case. So the 15-year can also be more beneficial to you because there are lower interest rates on 15-year mortgages than there are 30. The longer maturity something has, a bond or a loan or whatever, it has typically associated with it that maturity risk premium, right, which makes for a higher rate, right, a higher interest rate associated. Therefore, the shorter, the 15-year, will have a lower rate associated with it. So I say a 15-year, no more than a quarter of your take-home pay. That's how much your payment should be on your home, and then get that thing paid off like the sixth part of the financial action plan. Get your home paid off as you are investing aggressively, as you are enjoying your money and enjoying your life, because you don't have any other debts, right? And that's the thing. You can afford a 15-year mortgage when you don't have debt. Right? You can afford a 15-year mortgage when you don't have anything else that is pulling you down over time, right? Then the last question is, who can help you to find a home and guide you through the purchase? So a real estate agent can help you to locate homes that meet your needs and that are in your price range, and then get you to view those homes. Now, once you've chosen a home to buy, these professionals can assist you in negotiating the entire purchase, including making an offer, getting a loan, and the competing paperwork, right? So they can do all that for you and help you through that process, okay? So all of this is very, very important. We need to make sure that we follow this to a T. We need to make sure that we can own a home and the home does not own us. Okay. Now, kind of going back to that whole idea of owning the home and the home not owning us, right? We need to clarify just a few things. I need to clarify a few things about home ownership that I think is very important before I leave you today. Okay. Now, like I said at the outset, a lot of people talk about, why paying off your home may be dumb, right? And the reason that they say that is because it's cheap debt, right? And their theory, right, their thought process is, well, I can take out this cheap debt and I can invest, right? I can invest this cheap debt, okay? And I can make the difference. I can make the spread on this debt. So I can, maybe pay my home down to a certain amount or even pay my home off, right? Some people do this and then do cash out refinances, and then they invest that money that they refinance to, and then they just make the payment out of that money and then allow their money to grow. Now, this sounds good in theory, but this doesn't take into account the risk of just having this large debt looming, right? Who would want to fall into a situation? I'm not saying it's likely, but who would want to fall into a situation where they, lose their home because they did something dumb? Who would want to lose their home because, they did something that wasn't prudent financially, right? I'm not saying that this can't be done. I'm not saying that this shouldn't, be something that mathematically works, because it does, right? But what works mathematically and in theory doesn't always work in practice, and typically comes back to bite people in the butt when it comes to practice, right? Ultimately, what do we want out of a home? Why do we buy homes in the first place, right? The reason that we buy homes in the first place is because we want something that's our own, right? And ultimately, if you never pay that thing off, it's never your own. And if you never pay that thing off, then you're not going to have substantial equity that you're, leaving to your children, right? And I'm not saying your house should be a huge part of what you leave to your children, because I don't plan for mine to be. But what do I know? I do know that for a lot of people, that the house really encompasses a lot of the wealth that they have. Right. So ultimately, getting your house paid off, it is going to make a huge difference, because you're going to free up so much cash flow. I say that debt's a strain on your cash flow, and I say that mortgage debt is debt that we can live with for some period of time, right? But it is still a strain on your cash flow. It still strains your cash flow, and I would argue more than any other debt, it strains your cash flow because it's such a large debt and it's such a large payment. But once we get that payment out of our lives, think about if you have a payment that's a quarter of your take-home pay, and then you get that out of your life, you're getting a quarter of your take-home pay back, right? So now what can you do? You can invest extremely aggressively with that money, right? You can do all the things you've ever wanted to do in your life, in your financial life, in your adventures that you want to go on with your family, and your entertainment, and all the, extra things you want to do in your life. You can start doing those. You can buy things that you never thought you could buy before, because now you actually have the money to do so, right? But if you constantly keep having to make those payments, then you're never freeing up excess cash flow for you to use on whatever you want to use on. Now, I'm not going to argue with you about it. I'll tell you what I think, because this is my show and it's my microphone. So I'll tell you what I think, right? Ultimately, you do what you want to do there. But I'm not going to take out debt, excess debt on my home. I'm not going to refinance my home and cash it out in that way, right? I'm not saying refinancing is bad. If you have too high a rate, refinancing down to a lower rate, cost-wise, is a good idea. But ultimately, cash out refis, I'm not interested. Reverse mortgages, not interested. HELOCs, not interested, right? But people use these or try to use these to their financial benefit. I just don't think it's worth your time, your effort, or the risk associated. So just don't do it, right? And get your house paid off, and then you have a house. It makes the difference, because now you actually know that you paid something off, and it feels good, right? And you don't have that thing looming over you anymore, and you have more options. You have more freedom, and that's what I'm trying to do on this show. I'm trying to help you to attain financial freedom. And what more financial freedom, what more options can you have than when you have no house payment? That's what I want for you, and that's why I gave you this information today that hopefully helps you to buy a home more prudently and think through the process of home ownership and see what's best for you in your own financial life. So thanks for watching this video. If you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual watching or listening to the show on a day-to-day basis. So tune in tomorrow as I continue talking about personal finance topics that I think could be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.